Welcome to The Explainer. You ever wonder how a company goes from just an idea on a napkin to a billion-dollar valuation? Well, today, we're going to dissect the anatomy of a unicorn pitch. That's the story that gets investors to write some truly massive checks. We're going to break down a real-world summary to see exactly how a multi-billion-dollar company gets born, at least on paper.
So think about it. Every time you ask an AI to write an email for you, or generate a wild image, or just answer some random question, something is happening behind the scenes that you never ever see. There's this physical cost, right? A hidden price for all that digital magic, and it is getting very, very expensive. How expensive, you ask? Well, we're talking about a market for AI data center energy and cooling that's projected to be over $200 billion by 2030. Let me say that again. That's not the market for AI itself. That's just the cost to keep the whole thing running without literally melting down. And that colossal number? That's the key to this entire pitch.
All right, so let's get into it. First things first. Before you can ever sell a solution, you have to make everyone understand the problem. And for the company we're looking at, Liquid Dynamics, the problem isn't just big, it's a fundamental threat to the entire AI revolution.
You know, what's so interesting here is how simple the core issue really is. Just picture the world's most powerful computers, all crammed into these giant warehouses, all running at 100% 24/7. They're sucking down enough power to run a city, and all that energy has to go somewhere, right? It becomes heat. Immense, concentrated, and incredibly expensive heat.
So once you've laid out this massive $200 billion problem, bam, the next part of the story introduces the hero, Liquid Dynamics. This is the company that says, we have the solution. We can tame that heat and make this whole AI boom sustainable.
Every great tech pitch has a secret weapon, some kind of proprietary magic. For Liquid Dynamics, it's called MIPT technology. Now, forget the acronym for a second. What it does is both simple and totally brilliant. It combines clean power generation and super efficient cooling into one single system. I mean, think of it like smashing a power plant and an industrial-sized refrigerator together into one hyper-efficient box. This isn't just a better air conditioner, it's a whole new engine for the data center.
And this is where it all clicks. The old way is just brute force. Use tons of energy and space to fight the heat. The Liquid Dynamics way is elegant. It promises lower costs, both upfront, that's CapEx, and day-to-day, that's OpEx. It helps these giant tech companies hit their environmental goals, and it takes two huge, separate problems and rolls them into one neat solution.
So you've got this world-changing problem, and you've got this unique, killer solution. That's great, but how do you actually build a business out of it? How do you make money? This section is the blueprint for turning a great idea into a real, successful company.
Step 1. Know who you're selling to. And Liquid Dynamics isn't trying to sell this to just anyone. No, they're going after the whales, the hyperscalers. We're talking the giant cloud providers like Amazon and Google, the dedicated AI labs that are creating the next big thing, and the massive colocation providers who rent out data center space. These are the folks with the biggest heat problem, and more importantly, the biggest budgets.
And this is what it's all been leading up to. The whole document comes down to this one slide, the ask. They're basically saying to investors, we've got the problem, we've got the solution, and we know who the customers are. Now we need $50 million to build the machine, scale up our manufacturing, and start putting this tech out into the world.
Okay, let's talk money. This is where a pitch truly lives or dies. It's the story of the investment. An investor gives you $50 million. What happens next? How do they get it back, and then some? This is the journey from burning cash to making it.
So the story starts here, in the red. For the first 2 years, the company is projected to lose money. And you might look at that and think, wait, that's bad. But no, in the startup world, this isn't a sign of failure, it's a sign of ambition. This is that $50 million investment being put to work building things, hiring people, and grabbing market share before the serious revenue starts to flow.
And then comes the pivot, the big moment, 2027. This is the projected turning point when the company flips from burning cash to actually generating it. Everything in the business plan builds to this moment.
And after they cross that line, the story becomes explosive. I mean, look at this. From a $10 million profit in 2027, it quadruples to $40 million the next year, and then nearly quadruples again to $150 million in profit by 2029. This is that classic hockey stick growth curve that every venture capitalist dreams of finding.
And here are the raw numbers behind those pretty charts.
You don't have to memorize it. Just look at that top line. Revenue is projected to go from $5 million to $500 million in just 5 years. This is the kind of insane, aggressive forecasting you need to justify that massive early investment. So the crucial question is, what does this all add up to? A profitable company is nice, for sure, but it's not the ultimate goal for an early investor. They're looking for a massive, singular event that gives them their return. This is the final chapter of the story, the payoff.
The path to that huge payday, it's actually pretty simple. It's a 3-step plan. 1, use that investment to grab a big piece of that $200 billion market. 2, hit those crazy financial targets we just looked at. And 3, the grand finale, either sell the company to a tech giant or take it public in an IPO.
And here it is, the destination. The goal isn't just to be profitable. It's to build a company that's worth over $2 billion within 5 years. This is the number that defines what success looks like, from an idea on paper to a multi-billion-dollar enterprise.
And when you boil it all down, that huge valuation leads to this, the single most important number on the deck for an investor, a 10 times return on their investment. You put in $50 million, and in 5 years, you get $500 million back. That is the promise that makes this whole incredibly risky venture worthwhile.
So there you have it. We've deconstructed the perfect pitch. You have a massive problem, a unique solution, and an absolutely incredible financial promise. But it kind of leaves us with a much bigger question, doesn't it? As AI gets more and more powerful, will clever solutions like this one be enough to quench its bottomless thirst for energy? Or is the true cost of our AI future still something we haven't even seen yet?